Yo, what is up, everybody? What is up? So happy that you guys are here live with us. This is super important. I have been asked a lot recently. How am I setting up entities now that I've moved to Florida? And what's the best place to go get, an LLC? Why do you use an LLC versus an S corp? And how is it all set up? So it is super important, and mostly it's important for tax reasons. And so I happen to have an incredible partnership here with Prime and Tommy that you guys see. And they actually helped me set up my entities. We're actually setting up another entity right now in Florida as we are here live. And it's because the way I sent up my entities, I do it for tax purposes. And since it's tax season, I thought, why not go live with my boy Tommy and help people out, set up the right structure of entities, whether it's an LLC, it's S Corp, C Corp, trust, or otherwise, but also make sure you understand the tax repercussions of setting them up the right way, right? That's why I set up mine is based around tax repercussions as much as it is, protecting myself, right? And then also, lastly, I constantly get hit up for business lines of credit, things of that nature, and they help you with all of that. But these are my guys who I use for all the entity stuff, all the tax stuff, and business lines of credit. So I thought, let's bring Tommy on. Let's introduce him to the tribe. Give Tommy a very warm welcome. And he's just going to tell you essentially what he does for me and he does with all of his clients, and how that would benefit you. And trust me when I tell you, you want to be set up the right way. If for no other reasons, for the tax write-offs that you're going to get if you're set up the right way, right? That is a huge thing. Keep the money that you make. Okay. So Tommy, with no further ado, you're my guy. I know that, but I want everyone to know who you are so they can contact you, get set up the right way. They can tax plan, they can get business lines, but also they can look at all the different write-offs that you guys are able to set up with the proper structure of entity. So dude, I'll let you take the mic from here.
Awesome. Thank you, man. Thank you so much for having me. It's good to see you again.
Good to see you, brother.
The only problem we had with some of Justin's entities was picking a business name.
Oh, bro. And I even told you, I was like, I don't care about the name. You can name it whatever. And like 72 different iterations later, we finally got the right name.
For sure. But that's part of it, right? We want to make sure it's something that isn't already taken, and we're doing the proper name searches, both state, federal, it all goes into it. So yeah, thank you. I'm happy to be here. I'm excited to work with everybody. Justin said it perfect. At the end of the day, if you treat something like a hobby, it's going to cost you money like a hobby, right? And most of us have plenty of hobbies. So when you get into something that you want to treat like a business, set yourself up that way so you can reap the rewards of what businesses have to offer, right?
That's right.
It's not about how much money you make, it's how much you keep. And at the end of the day, what we want to do is we want to take an overly complicated topic in taxes and asset protection, and we want to simplify it so that it's not overwhelming. You actually understand what you have and you're actually using it. But from there, let's make sure that you're showing yourself as a business. Let's utilize the tax benefits, and let's make sure that you have asset protection as well. So I've got some slides here. I'm going to share my screen and we'll go through these if it lets me share them. I believe I've got them here. Okay, there we go.
Hang tight. No one can see him yet. I'm wondering if
are you able to? Can you see him?
I can't see him.
Well, let's see what we got then.
While we're taking this time, if you guys are here, let us know you're here. Say what's up. Throw your name in the comment section. Would love to say what's up to you guys as we're figuring out a couple technical issues. John, what's going on? Stoney, what's going on? Nicole, Ian, good to see you, Ian. Yeah, throw it in the chat. Give us your name, level of experience. What are some needs maybe you have? Would love to help you out. When you hit that share button, it doesn't share.
It's making me do this through a Google Chrome, but let's see if it'll let me just share my entire screen and then I'll pull it up. Can you see this?
Hmm.
Oh no, it wants me to go through these privacies. That's okay. Why don't we do this? Let's talk through it because you've seen the slides, and then maybe what I can do is I'll just send you over the slides,
Yeah.
and you can just include them in there. I'll just give you
I'm
the.
wondering if this helps. Does that help? Does that layout help? I don't know if there's maybe a layout that
I think that it's telling me that it's something in regards to my privacy setting with Google Chrome.
got it. Okay.
So let me see if I can go to the security and the privacy real quick because it is nice to have the
Yeah,
vision.
people can understand. Andre, what's going on? Maurice, what is happening?
And then same thing, kind of
Denise?
while I'm pulling this up, I'm interested. Who has entities? You kind of man the chat for me here, if you would, Justin.
Yeah,
But
let's do it.
LLCs, S corps, is there anyone out there that doesn't have any entities? That one of the most common questions that we get is, I feel like it's too early, right? I feel like should I wait until I'm actually making money? Or at the end of the day, when you're in the US, everyone should have a side hustle or a side business. And the benefit of doing that is there's over 75,000 pages of a tax code. We want to still play by the rules. We don't want to raise any red flags, but we also want to make sure that we're not overpaying in taxes as well. So,
Yep. That's really the game. So, and if this doesn't work, that's okay. I know we're on a little bit of a time crunch. I'm not certain why it's not sharing.
I'm trying to find it in the privacy here. I should be able to, but I'll like I said, I'll share them, and then if we need to do this again, we can do it again as well.
Cool. Yeah. Well, why don't you let it rip so everyone kind of knows
Cool.
what the
All right.
story is here.
So, four takeaways that I really want from this presentation here. First and foremost, just different types of entities. It can be overwhelming of, should I have an LLC? Should I have an S corp? Do I need a holding company? A lot of that obviously depends on your situation and other streams of income that you may have. But part of our offer to you and being a part of this community is helping each and every one of you understand your specific situation, right? Entities aren't set up the same. There's not two entities that are set up the same, but everyone's situation is a little bit different as well. So that's number one, different types of entities, how they benefit you. Number two, what is a tax deduction? How do they work? And what deductions am I able to take as a home-based e-commerce entrepreneur, home-based real estate investor? There's over 250 different deductible expenses for real estate investors. How confident are you that you're really opening up that tax code, like I said, and not leaving money on the table? Number three, asset protection and generational wealth. A lot of people that are self-employed generally have a bigger purpose than their own, right? You don't usually get into being self-employed because you only want to make a bunch of money. A lot of times it's for freedom, time freedom, family freedom, being able to build a legacy that's bigger than your own for future generations. Protecting yourself now is important, but having the vision of where you're going and where you're going to end up is also equally as important. If you know where you're going, it's a lot easier to get there. Last but not least, number four, tax time is here. It's already started. How can we still help you save thousands of dollars in taxes, even if the year's already over for last year? Let's make sure you know what you're doing for previous years, but let's take advantage of what those tax changes are moving forward. Now, from a business structure, number one, like I said, there's so many different options that I think the easiest way to break this up is informal business structures and formal business structures. So informal business structures are something like, I like to compare it to like a hairdresser, right? Because it's so easy to picture. When people go through hair school and they end up renting a chair, a lot of times they just run that money through their own personal name. So when you do that, you're still classified as a sole proprietorship. You can go get an EIN number to legitimize yourself, which is great. But if you're a sole proprietorship, one, there's not any asset protection, and two, you're limiting the deductions you're able to take as an actual business. So from sole proprietorships and general partnerships, I see a lot of general partnerships when people get into business with family members or friends, or if they purchase a property with a family or a friend, a lot of times they'll do a general partnership. It's better than nothing, but there's limited protection and you're losing deductions. So, from an informal standpoint, that's kind of where people go. From a formal business structure, I truly believe that anything that you're doing, do it right from the start. And it's so much easier to build and grow if you have that proper foundation. So, formal business entity structures are LLCs, S corporations, C corporations, something that you're legitimizing with the IRS. Okay. And for those of you that are potentially just getting started, haven't even done a deal yet, what the IRS is looking for is that you are showing the intent to treat and operate this as a business. Remember that. When you're showing the intent, you are able to take deductions as a business owner. So the example that I use oftentimes is, think about restaurants, right? Everyone's got a couple restaurants that's with close to the proximity of their home, that's always changing the business name or always going out of business. Restaurants are difficult, but you can show a loss 2 out of your first 5 years in business. So even if you haven't done your first deal, let's help you understand how to make sure you're writing off coaching, education, the expense to be a part of the program, vehicle, home office. Which ones do you qualify for, and how are they going to impact your tax situation? Okay, so that's the major differences: informal, sole proprietorship and general partnerships; formal, LLCs, corporations. Now, what is a deduction? What deductions am I able to take? What do I qualify for? How do I make sure I'm not raising red flags by being overzealous with deductions? Or how do I make sure I'm not leaving money on the table? It's a fine line to walk, right? It's a lot of gray area for
And
any.
trust me, I tell my accountant, I push it, and he says, "All right, guy, okay." My accountant's always pulling me back into reality.
And it's a good thing to have that kind of check and balance. But first and foremost, a deduction. I like to use, if anyone's seen the show Schitt's Creek on Netflix, I love the analogy of when David's like, it's a write-off. The government's paying me back. It's not a refund. Obviously, it's just offsetting the income that you make. But what I think is important to understand, a lot of times the reason we start with LLCs is, even if no money's made, as long as you have taxable income, a W-2, Uber, Lyft, DoorDash, as long as there's money that you have to pay taxes on, when you have a side hustle, a side business, or you're showing the intent to treat this as a business, those are going to flow through to one return. So profit or loss, good or bad, legitimizing yourself as a business ultimately could end up benefiting you either way. Okay. So, like I said, phone, internet, power, think to yourself, what does it take to run this business? Right. And one of the things that Justin and I talked about, I think it was last week, is the tax code is meant to impact behavior, right? Tax codes are changing every year. And oftentimes it's because they want us to act a certain way. When COVID started, restaurants were impacted. So for 2021, 2022, they come out and say business meals are 100% tax deductible instead of 50% tax deductible. That's huge, right? How many times do you go and do you talk about business, and do you go to dinner with people? And Justin and I were joking, like, it turns into, when you go to a business meal, people fighting over taking the check because of that additional deduction. But little changes like that could really make a big difference on your bottom line, right? Justin, what else deduction wise? I know we've talked about quite a few things, but I mean, marketing, rehab.
I think people need to understand, like, to finish out 2021, I had to figure out how to spend more money for more deductions at the end of the year, right? And it's because of how I set up my entities, right? And so it's important to understand you don't need to even do your first deal in real estate. And many of you follow me for the real estate section. You don't even need to do your first deal, but it is imperative you have your proper entity structure, LLCs, S corps, because of what we're talking about right here, which is tax deductions. Tommy brought up your office, your car, meals. As a person, a single person, I don't get the chance to write off taking Tommy to dinner. I don't. I
Right.
just, that's just my expense. As an entity structured the proper way, I can now make that 100% tax write off, right? Those are the things that is so important. If you're a part of my tribe, you need to know how the wealthy people think. The wealthy, not rich, wealthy. This is part of it. They know where the tax secrets are. And so I would urge you to get your entities set up. And I saw a comment, I forgot who it was. Someone said, I already have an entity set up, but I'd be interested in someone taking a look to make sure it was done the right way and is structured the right way. That is just as important. If you already have an entity or several, make sure it's the proper structure, right? Is it the S Corp or is it a C Corp? Is it a general partnership? Is it limited liability? Is it a sole proprietorship? Those things actually have tax consequences if you're set up incorrectly. Okay. So understand, and there's going to be a link in these threads that I can get you guys a complimentary call with Tommy and his team so that they could just review your scenario, whether you have an entity or not. They're just going to for free. They're going to complimentary just help you and advise you, right? And that's really important. These are the guys that I trust to do that for me. And if they're good enough for me, they're damn sure good enough for you, because it's super, super important. I had to get this done because I moved to Florida. Guess what's great about Florida? Tommy, why is Florida so great? You tell the people.
No state income tax.
So
Soon
I had to move my
let's move it. Let's get it out of there.
right. So then I had to go do that and called up Tommy. He said, I got you, buddy. And so now we're doing that whole restructuring of everything I got because now I physically live here. So, guys, again, I'll let Tommy run, but this is so, 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 so important. You do not need to have done a deal yet at all. You do not have need to have made revenue yet in your business at all to start having write-offs, deductions in a proper way. So I'll leave it there. This is so important, guys. I'll make sure I put a link to a call with Tommy and his team so they can just kind of audit your current situation, because depending upon how it was set up, if it's already been set up or if you need it to be set up, they can handle it for you. Anyways, Tommy, you can go on kind of the next bullet point.
Well said. I threw that link for them to be able to schedule a call in the chat for you as well, so you can share it wherever you need or wherever you like or whoever needs it. But to Justin's point, and I'm happy, thank you for whoever asked that question. I missed the name, but I think the importance of that question as well is understanding that every state is different. Not only to Justin's point of which states don't have state income tax, but the liabilities that go into that operating agreement. When we do operating agreements, the articles of incorporation, the substance of your LLC or your corporation, every state is different for us when we structure those because everyone's liabilities are different per state as well. So our team of attorneys have structured those to be state specific. If you are structured, we are more than happy to look over those, review those with you. And like I said, because tax time's here, it's fitting that we're having this conversation now so that we can make sure that T's are crossed and I's are dotted and you can move forward, right? A lot of you are probably aware, if not, this is something that came out. Amazon didn't pay any money in taxes, right? A lot of people know that. A lot of people have heard that. And it's not by accident. When you have someone that's helping you with tax planning as opposed to just tax filing, January, February, March, you should know for quarter one what that profit and loss looks like. But going into quarter four, to Justin's point, all right, make some investments, Justin, buy some properties, make some investments to better your business, or you're going to be handing that over in the form of taxation. So it's something that you need to preemptively plan for in order to make investments as you're making money. Those are great problems to have, right? The more good problems to have, the better. But still have that understanding, because that way you can make it a lot easier on building and growing your own business. Now, some additional benefits. First of all, asset protection. It's kind of the elephant in the room. It's my least favorite thing to talk about, to be totally honest. But a lot of people set their businesses up, especially in real estate, to separate their personal and their business. It is extremely important. It isn't as sexy as tax benefits. I don't think tax benefits or taxes are sexy, but there we go. We're using it. If you can make sure that you have that peace of mind that your personal is personal, business is business, and the liability is separated, I think it's a huge peace of mind to overcome fear, right? I've been doing this for a long time now. And when people have a hard time getting off the ground, a lot of times it's something internal that has to do with fear as to why they're not taking action. Some of that fear for some people is, what if I do something wrong? What if I mess something up? Structuring yourself the right way to separate those two hopefully alleviates some of that fear so that you are able to go take action. The next slide that I have here that I'll show you when I send it over to Justin, you can take a look at it. 40 million lawsuits every year, 76 new lawsuits a minute. I share that because it's so ridiculous. It's such a sue-happy world that we're living in, such a litigious society. It is what it is. We got to prepare for it, right? Breach of contract, slip and fall, premises liability. Those are 3 of the top 9 lawsuits last year. There is liability in real estate. That's the rude reality. But if you're prepared for it and you're structured properly, it takes one more thing out of it that you have to worry about on a personal level. Okay, so asset protection, let's move on from that. The last couple things that I want to touch on before maybe, Justin, we can open it up for a little Q&A as well, is personal credit versus business credit. And when you schedule a call to speak with our team, this is something we can break down in greater detail. It is one of the things real estate investors are always interested in learning more about. How can I get away from feeling like a piggy bank, right? Personal's personal, business is business, not only legally, but financially. So to give everyone a visual, right now, you have a legal name, you have a social security number, and you have a credit score, your FICO credit score. We want to make sure that we have properly set up the same thing for the business. Legal name, EIN, employer identification number. It's like the social security number for your business. But how can you also build and develop a separate credit profile for your business? Okay. There's a Paydex profile. It's Paydex. Paydex. It's a credit profile for your business. It ranges from 1 to 100. 80 to 85 would be like you having a 750 to an 800 credit score. But it's for your business. So if we can build up that credit profile, get you a gas card, get you an apparel card so you can get hats and some gear for your company, but be able to grow these larger lines of credit over time, use business credit, let the business pay for itself in reimbursing the business credit, and then pay yourself from there. You're keeping yourself organized from a tax standpoint. You're giving yourself a salary or a distribution, but the liability is separated legally and financially. So super exciting. It's a huge, huge benefit for real estate investors. One of the analogies that I use is when you were 15 years old, if someone said, I'm going to help you make sure you have an 800 credit score by the time you turn 18, by the time you turn 20. When you're 15, you're like, okay, I guess I'll figure it out. Why is that important? Then you turn 18 and you get your first credit card, car loan, student loan. You're like, man, I wish I had an 800 credit score. That'd sure help my life out a lot. Having good credit is a luxury. It makes your life easier. Bottom line. Having good business credit's the same way. So I'm okay with my business credit looking a little bit like a roller coaster because that means I'm doing deals and I'm making money. I don't want my personal credit score to look like a roller coaster. I want the personal security for myself and my family, but I want to be able to go build wealth and build um, business, whether it's real estate or any other sector, by utilizing business credit. Okay. So huge advantage there. Um, the last thing that I'll end on before we open it up with a little bit of Q&A here is, like I said, everyone's different. If you're brand new, don't let some of these different concepts overwhelm you. Let's crawl before you walk and walk before you run. But I do understand that there's also some of you that are already doing several deals, that have been in real estate for years, that maybe have multiple streams of income already. We can also break that down at a high level. Okay. One of the areas that we focus on is we do have a team of estate plan attorneys, trusts, wills, living wills, power of attorneys. For real estate investors, one of the common questions that we get when people become successful is, I want to be totally private. How do I have additional anonymity? How do I make sure my name and my address is not on there? I don't want a renter knowing where I live. So at what point does it make sense to have a living trust own a holding company out of Delaware, Nevada, Wyoming? Those states have additional privacy and additional protection. And then if I have some long-term holds, I want that separate from any wholesale deals or rentals, or not rentals, I'm sorry, any fix and flips or wholesales, right? Short-term income, active income is different than long-term income and passive income. From a tax standpoint, we want to clarify that, okay? And then in addition to that, I had another phone call this morning. It's timely that we're having this conversation because it's a client I've been working with for a couple years. She said, my health insurance is a joke. I'm paying $1,000 a month and I don't even use it. How can I make sure that my health insurance premiums are deductible? Is there anything else that I can do? For those of you that are currently employed, ask your employer if they have health saving account options. Okay. If you're single, I think it's about $3,500 you can contribute. If you're married, it's about $7,200, $7,500. Health savings account, if your insurance qualifies, is an excellent way to give yourself some additional deductions. Okay. SEP IRAs, trading accounts. There's so many options that we can do to continue to get more creative. But like I said, crawl before you walk, walk before you run. If you're just getting started, let's still make sure you're structured properly. Let's still make sure you're maximizing on your deductions to get the largest amount back possible. But for those of you that are already doing deals, let's also take a look at that and make that happen as well. So asset protection, tax benefits, show yourself as a business, but let's do it at a rate that you're comfortable with and that makes sense for your situation.
Yeah, man. Thank you for taking the time here. I really want to encourage everyone to ask some questions right now. Like, this is live in Facebook groups, in some of my coaching programs, it's live on YouTube. I want you to take the time right now to ask Tommy some questions. Here's the one thing I know out of the gate will be true. If you want to find a way to not have to, or I guess the best way to say it is to keep more of the money you're currently making, regardless of you actually making any revenue in your business that you are just starting, you need to have an entity. So there's a link in this chat, in the thread somewhere, that you can book a totally free call to help them do that. They actually, Tommy and I talked about it. He offered, to take care of all the customary costs. It's just the hard cost of the form. They will set it up for you for the cost of doing it. A lot of companies out there, there's customary fees and charges. Tommy said he's going to waive it. If someone needs an entity structure, he's going to take care of it for you guys. So that's my deal I worked out with Tommy. Take advantage of it, right? The other thing is, if you are actively have a structure, I would encourage you to talk to these guys about making sure it's the right structure for what you're trying to achieve. Okay. Just because you have an entity set up doesn't mean it's actually going to give you the deductions you're looking for or the protection you're looking for, right? So make sure, again, that link is you know um, it is a complimentary call with their team to do an audit of what you got or what you don't got and what you need, and then they'll advise as such. Um, and so this is a no-brainer, guys. You need to do this the right way. Just like I continue to open up entities, we're literally tomorrow closing on 9 properties in Birmingham, Alabama. So my next conversation with Tommy right after this is, hey, we need to talk about the estate planning, right? Because I have 2 partners in that. So we need to make sure that we're protected in these properties, and you know, God forsake it if anything ever happened to any of us. So all those are the conversations I'm having with Tommy at the level I'm at. You don't need to be at my level. You can be just starting, just getting going, having aspirations to get to where I'm at. Meet with them, right? You always need those type of advisors in business, because I only know as much as I know because I learned it the hard way. You learn a lot in 14 years, and it's not always pretty, right? I wish I knew Tommy about 12 years ago.
Right.
Saved me a lot of heartache. But take advantage of the link, book a call. It's complimentary, it doesn't cost you anything. If anything, you're just going to learn, right? There are a couple questions here about business lines of credit, and how, what if you don't have great personal credit? How does that affect you getting business lines of credit? So maybe answer a couple of those.
Yeah, great question. So building business credit, it's not rocket science, it's a process, right? You can build business credit whether you have great credit, bad credit, no credit. It truly does not matter, but it does take time, right? I feel like the commercial on the radio that's like, get a car, bad credit, no credit, doesn't matter. That is true, but it just takes time. So, with that being said, it isn't something that's going to happen overnight. If you have good personal credit, it makes your life easier, like I said, which naturally is going to make it easier to build business credit. So it's going to take a little bit more time. It still takes 3 to 6 months to build excellent business credit. So it's not something that you get money right next week, right? If that's the case, we do still have some options. We have an affiliate relationship with American Express. If you need money right away, there's personal credit options that are out there. But building true business credit that separates your liability long term takes a little bit of time. I'm yet to have someone call me back and say, Tommy, I sure wish I didn't build business credit. This is terrible that I have additional funding options, right? For entrepreneurs, it just doesn't happen. It's one of those things that if you're going to do it right and have the long term in mind.
Yeah. Let's see. We have some good questions here, man. We have a lot of good questions. Hold on. I'm trying to show some. Here's a good one that just talks about how do you get business credit when you don't have any transactions or transactional history.
Great question. Yeah. So, what we do is when we put you through that, our credit team is amazing. We have the person that helped put it together is still with us, and he taught at the University of New York, University of San Francisco. He's been in banking for ever, 40 years. And he's going to continue being with us. He's just a part of our team. And that's what we do is we help you understand what different creditors, whether it's a gas card, a Staples card, a Lowe's card, which ones can you get that are going to report monthly instead of quarterly or annually to get you the transactions you need within 90 days to be able to get some actual lines of credit. And then once you're going to look for those lines of credit, not all banks are created equal, right? Some banks are more willing to work with real estate investors. Some are more willing to work with subways, brick and mortars, and it's constantly changing and evolving. So part of what we do is we give you that full 12 months of support to teach and show you what to look for to not only get the largest lines of credit, but the lowest interest rates. A lot of times 0% interest rates for 24 months, 18 months. Those introductory rates are amazing ways to keep more money in your corner.
Yeah, and I'll just tell you guys, I just actually went and got another line because it was 0% for 15 months. And I just said, who doesn't want free money? Like, I
Right.
don't care, listen, I run a lot of different businesses. Like, free money is free money. I'm not silly about it. Like, right. So there's a lot of options out there for you guys. What about this one?
When I do all these tax deductions and depreciations, won't it affect my ability to get loans? Phenomenal question. Depends on how you end up doing that. It absolutely can. If you're taking a lot of depreciations, it absolutely will impact what your income levels look like, right? But here's a huge, huge component here. How is that showing for how you're paying yourself personally? And how is that showing for what expenses are business related, right? Banks like cash flow because they know money's there. Banks like assets because they know their money's there. So how are you showing those deductions and depreciations? Is it against your business or is it against your personal? I highly recommend that if this is a problem you're running into, to schedule a call, because all this comes down to is tax planning and understanding how it's going to impact you in the future. It's a phenomenal question. It's one we get all the time, but this can be very, very frustrating for entrepreneurs as a whole.
Totally. So a lot of people are asking for the link. I'm going in on my phone right now and making sure the link is, because a lot of people can't see it here, Tommy. So
Okay.
there's multiple groups it's going to. I'll go into each group and make sure the link. If you're on YouTube, I just posted it in the YouTube thread. If you're on YouTube watching it, go to the YouTube thread and comments. You'll see it. On the Facebook groups, I'll make sure I repost it.
Awesome.
So I will tell you guys one thing. Just
the slides as well, and you can share those in the Facebook groups. I'm sorry I couldn't get that to share.
no worries. Here's another question, Tommy.
Does tax benefits and securities automatically come with an LLC? Not automatically, no. I mean, tax benefits are there. So I guess this is a two-part question. The tax benefits are going to be based off of how the LLC is structured. Is it an LLC? Is it taxed as a subchapter S? Is it a single member? Is it a multi-member? That's going to change how those tax benefits are able to work for you moving forward, right? There's still ways that we can take startup expenses, organizational expenses, actual business expenses, but how that entity is structured is going to impact the tax benefits. From a security standpoint, it will give you the separation and the protection, but it also depends, once again, do you need to change that property into the entity for the protection? Is it a single member or a multi-member? And do we have that clarified within the documentation? Once again, it totally depends on your situation. This is why I say not all entities are set up the same. You can do it yourself. You can hire an attorney. I think the reason that we truly are such a great fit for this community is we've worked out a free consultation. We've worked out the discounted rates where you have to pay the state the filing fees regardless. But if we can make sure it's structured for what you're trying to accomplish, it gives you that peace of mind moving forward of knowing the answers to these things. When doing deductions for courses and mentorship, does it need to be in the same year? Ideally, it could be or it should be, but there are ways that we can go back on that. This totally depends on, one, the knowledge of your CPA, and two, when you made the investment and when you structured the entity. Ideally speaking, if you can do it within a relative time frame, it is going to benefit you. But this varies. We can go back, we can make amendments if need be. We don't want it to necessarily always look like education either. We want it to be startup expenses, organizational expenses, or mentorship, like you mentioned, for your actual business.
Yeah.
It's
I know we're running up against the time here, brother. What I would tell all of you guys, some of these questions, there's a lot of questions here, and they're good. I can tell you, I think, to answer that directly, I spent $115,000. I did last year in 2021 on coaching and masterminds. The year before, I spent $85,000. The year before was a number I don't even remember. But what I can tell you is I think my accountant said you have up to 3 years, Tommy, that you can go back and change or edit or modify your tax returns to have those very specific write-offs. Because in 2020, I didn't write off the $85,000 the way I wanted to. So he was like, we're able to go do this and do that. Now, I'm not an accountant, but I believe there's that rule somewhere around there.
And that is absolutely correct. And I will tell you this is where I said it depends on your CPA and it depends on their knowledge. right? That's a phenomenal point that your CPA makes. Make sure you have a team that is willing to do those things, because some are and some aren't, but you are able to do that for
Yeah.
sure.
Yeah. So, brother, I appreciate it. Everybody on here is watching. Great questions. Here's the deal. Go book a complimentary call. Tommy's team is going to answer all these questions and make sure you're set up the right way for you. Not everyone needs to be set up one way. There's not one size fits all. If you're a real estate investor, there's kind of a common way, but it doesn't mean it's going to be, because if you're buying rentals, short-term rentals, wholesaling, flipping, there can be different things and different liabilities that you might be exposed to if you're not set up the right way. So just book a call. Let them tell you. They're the experts, right? Don't overthink this. I'll make sure right now I'm going to go back in all these groups and put the link, Tommy. And I appreciate your time, brother.
You're the man. I'll talk to you soon. Thank you. These are awesome questions for sure. And we look forward to working with everyone. So thank you for having me.
All right, guys. Later.
Talk